Okay, then no, but every time you, at least when I look at a bond, then there'll be a lot of different documents, right? There will be a term sheet, I think. There will be a fact sheet. There will be a prospectus, which is hundreds of pages and terrible. Do we actually need to read it? Like I kind of feel like I need to know the financials of the issuer, right? Because I want to know whether they can repay the bond. But do I actually need to read the bond documents themselves? Because that is very painful.
I mean, ideally it's good to read, but if
I mean, ideally I should read T's and C's before I tick, and then I
yeah,
sign up
I
for
mean, it's the
something,
same
right?
thing as also ticking off the T&Cs and also reading it,
Yeah.
clicking on the disclaimer policies, right? It's the same thing for prospectus. Also, it's always good to read. But again, a lot of investors typically don't do it because number one is your time, the amount of time needed, and sometimes it just gets a bit too complex with all the legal terms.
That's
But
terrible.
what I would focus on is looking at that summarize. There's always a summarized sheet of paper called the term sheet or a fact sheet. So I think that's important because it sort of condenses all the important factors of the bond itself, and I think that's important. And whatever we just discussed earlier on, things like who the issuer is, the maturity, the interest, whether there are special features, it's all condensed into that very short summarized sheet of paper, and I think it's called term sheet, right? Yeah. So the term sheet or the fact sheet, I think at least that's what investors should be looking at. If they do not have time to read,
that's true. I at the very least should know whether it's a perpetual, right? or what the interest they're going to give me, and how often they're going to pay my interest. Right? I should at least know that's correct. So okay, so I think that the fact sheet is the term sheet is probably the key document to read, because I think that sets out the main commercial terms, right? Then the rest is just kind of like legalese and things to fulfill regulatory requirements. I think in a sense, because I don't know why, but for whatever reason, the view of bonds is that they are kind of more risky, and that's why you have all these like AI requirements and all that, because MAS feels like I need to protect the audience, right? So I need to kind of only allow people who have a bit more money, because if they have a bit more money, I assume they are more sophisticated, or I assume that they are able to get better advice on all these things, notwithstanding that they are price takers of the bond terms. And that's why there's a prospectus, right? It's for disclosure, to tell you everything you need to know about the company, I think. I mean, if I do feel like reading it, is there any particular section I know it's very busy, don't laugh at me, okay? Very busy.
No, it's a valid point.
250K is a lot of money, yes, but also still very busy lah. Maybe I just don't buy bonds. But if I really do feel like I need to do that research in, where should I focus my energies on, right? So I think we definitely need to do financials. That's the key driver of performance. We definitely need to do term sheet. That's the main characteristics of the instrument. And let's say I really have time, I want to read the prospectus. Is there any specific section I should look out for?
So you want to look at the offer of the whole term sheet. So the offer, what's inside the offer is usually talking about who the issuer is, like who is the one borrowing the bonds, what's the coupon which is being paid. I think it's very important. People are naturally attracted to it. The maturity. So when are you going to get your money back?
Your face value back, right?
Yeah, correct. So the money, and then you also want to know, why they actually issue the bonds, right? So where the money is going. You want to at least know what is the company going to do with the money, right? You also want to be looking at some of the special characteristics which we have just discussed earlier. Whether there's a step up, whether there is a call option, whether they are able to actually redeem the bonds before the maturity date. Right, so these are something which you want to actually pay attention to, when you are assessing the bonds, and of course that's on top of looking at the financials. Whether it's a fundamentally healthy company, right, and based on the ratios which we also have discussed.
Yeah, but all these things should be in the term sheet, right? Because that's the top of it. I mean, the prospectus will have, I think, a lot more. So let's say it's a perpetual with a call option at certain points. The term sheet will set out the main meaning of when it can be exercised, and then the prospectus will go into 3 pages of clauses about exactly when it can be exercised, right? And it's full of not legal jargon, because we like plain English drafting, but it's full of lawyers just made it convoluted lah, because they need to cover all angles, right? So I think that's about it. And I think one kind of interesting thing that I thought was interesting as prospectus was this section called the risk factors. My understanding of it is that this is pretty much every conceivable risk that the company might face.
Oh yeah, of course.
So is that right?
Yeah. So risk factors is also one of them as well. To achieve, you want to know what are the risks involved when you're buying a bond. It could be currency risk. You want to know what's the industry risk as well. On top of that, you want to know, if let's say the company goes into default, what's going to happen, right? So these are some of the risks which it's good to actually pay attention to as investors. But of course, this is the guidelines which the prospectus give. When we are assessing the financials, the fundamentals, we also want to actually start thinking about what are the risks companies, our own measure of risks the companies would potentially face, and not just also looking at the prospectus itself.
Yep. So I think it's risks in different forms, right? So we look at the financials. That's kind of the quantitative risk. How are they currently set up? And whether maybe in the short term they have enough cash to pay the coupons. Then in the prospectus itself, it's qualitative risk, right? Where they are describing their business and they're telling you, well, if these things happen, for example, if they are a property company and they are building a lot of seaside towns, and they go, well, a risk factor is global warming because increasing sea levels means that our properties might be swamped and not as valuable, and therefore I can't pay you back, right? So that's a risk factor. So global warming is a risk factor, which is kind of like people know, right? Like, why do you have to write it? But not the point here. So I think that there's different types of risks, right? So when we talk about fundamentals, when we talk about documents, all of these things are really to kind of focus our attention on the business, right? And not only what they are now, but what challenges they could face in future. And then using that and using kind of our own assessment of what they are, then you make that decision, whether this is risky or not risky, and whether you should buy a bond. Does that sound about fair?
Absolutely.
Yeah. Okay, good. I thought that this sounded a bit odd, but okay, that's good. So in that whole set of docs, any other things you should look out for?
I think it's also important also to also find out all other than the risk, the financials. You also want to also know a bit. Sometimes the prospectus can give you a little bit about what the industry is about, and I think that sort of gives you a peek preview of the company, because sometimes you might not get such information outside. And having that industry overview also allows you to better understand where the companies are operating in and what exactly their business is. So I think that's a good icing on the cake, right? To sort of give you a bit more knowledge, when you are investing in bonds.
Yeah, it kind of provides you that context. And I mean, look, at the end of the day, we are talking about bonds here, but hey, if you IPO or if you do a share issue or a share offering, they also have a prospectus. You should also read it. It's also a document that's present. Just that again, I think the nature of equity is that it's relatively different because you always buy in the secondary market, right? So you if it's been listed for 5 years, you don't read the IPO from 5 years ago. You read the latest annual report. Right? So I think that's why but really they're all the same thing, where these are all documents that are trying to give you more information of the company so you can make more informed decision about whether you want to invest, whether it's their bonds or their equity. And then that's all there is to it. It's just giving you information for you to decide.
Yeah.
All right, that sounds very good actually. So we kind of know how we can think about bonds and the different characteristics of them, and the risk, right? How not to do a bond investment. So yeah, I think that's a good start. Yeah. Anything else you wanted to add before we go?
I think this is perfect. This is perfect, Anthony.
All right, sounds good. Thanks for your time again, man.
Thank you for having me on the show, Anthony.
Next week we'll talk about bonds again, but I think something else.